Joining us now, John Smallwood, who is the president of Smallwood Wealth Management, to talk about our investments, our 401k plans, and how it would differ if Joe Biden were, in fact, the winner of the race here November 3rd. So appreciate you being with me, John. Thanks so much.
Good morning. How are you?
I'm good. So I see these ads that Biden's running, he's flat out saying, look, you rich people are going to pay more. That's all there is to it. It's right in line with socialism. And it's funny. I told a friend of mine, she's a big Democrat, and she goes, it's just not fair that, people are struggling so bad and got all these rich, CEOs making all this money and all. It's just not right. And I said, what do you mean it's not right? They worked hard for that. Well, it's just, they should spread that around a little bit. I said, all right, how about this scenario then, Democrat? You made, let's say, for just discussion purposes, $20,000 last month. You know what? I only made 10. So why don't you write me a check for $5,000 right now? Yeah, silence. Shit, what? That's different. No, it's not. So if Biden were to win, boy, that's going to affect you and I quite a bit, isn't it?
Absolutely. Where do you want me to begin with how bad it's going to hurt?
Well, what happens if Biden wins? Where does it start with his changing of the system? Well, let's start with my 401k.
So the 401k is really interesting. Now when you put, for example, a contribution in for $1,000, depending on what your tax bracket is, you're taking that money and deferring it into the future. So it's a tax deferral, not really a tax deduction, okay?
Right.
What he's doing is he's putting in a tax credit for everybody that contributes. Now, a tax credit is a dollar for dollar reduction in your taxes, okay? And what he's doing is putting in a 26% credit. So the theory is the people that are below the 26% tax bracket are going to, in essence, get a benefit from the savings, which probably won't, because they're not contributing, so they probably won't get the benefit from this tax credit. On the other end of the spectrum, if you're above $400,000, which is what Biden's tax proposal is saying, is anybody over $400,000, you're going to immediately jump into the 39.6% bracket, and he's going to put on a Medicare tax above the $400,000 of 12. It's either 12 or 12.5% additional on top. So now you're going to put money in a 401k plan instead of getting that deferral on the 39.6 and
right.
all these other areas, you're only going to get a 26% tax credit. So it really doesn't provide any incentive for most people to do it.
This has to go through Congress, correct?
Correct. And both sides of the House have to approve it. But this is what they're talking about, though, right? So you have you have to look at what's out there, and the combination of it for most people. You don't hit the top bracket today of 37% until about $615,000 worth of income. So a lot of people are in that, married, filing joint, husband and wife do well, and their combined income is pushing over that $400,000. You're talking about a 50% tax on the money over the $400,000, and not an incentive to defer. It's
to defer and invest, right, in your 401k.
So people are going to put less money away, which means there's less money going into the stock market, which, do the math, right?
It falls right in line with the socialism and the, everything needs to be fair for everybody. And if you've got more than this person, you've worked harder than this person, it doesn't matter. We're going to take some more of your money because we're going to hand it out to these people here. It's ridiculous. It flies in the face of capitalism, and it's all about socialism. I can't stand it. And God forbid that this happens and he wins the election. But once again, John Smallwood, the book is called It's Your Wealth. Keep it. Check it out. Good points in that book. John, thanks so much for being with me, and we'll have you back.
Welcome to the end of the video. Smallwood Wealth Management is an investment advisor representative. The opinions expressed by Smallwood Wealth Management and guests on this show are their own. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented for this educational purposes only. Moreover, no listener should assume that any discussions or information presented serves as a receipt of or substitute for personalized advice from Smallwood Wealth Management or from any other investment professional and is not intended as an offer of solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Smallwood Wealth Management is not a law firm or an accounting firm, and no portion of this presentation should be interpreted as legal, accounting, or tax advice. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Thank you for listening.